Good morning, everyone, and welcome to another edition of Bleeding Crypto's 15-minute market update. Today is Friday, August 23rd, 6:47 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor. This is not financial advice. This is to be taken as entertainment purposes only for your fantasy paper trading. All right, guys. So I did not do a video yesterday because there is just not anything to really report. Look at this. This is all we did yesterday. We just chopped in here, and we've been in this really tight chop area for a while now. So there's really not much to sit here and just tell you. The only difference about today is that we have a major announcement. So that major announcement could be, or maybe becomes nothing. It could be a nothing burger, but it could move and start carving a direction and get out of this chop zone. So today is going to be, today's plan is going to be basically speculation. And at the end of the day, it's all speculation, but it's speculation based on key levels. I think I use speculation based on the data. So I look at all kinds of data. I look at the high block data. I look at the DCT heat maps. I look at support and resistance. I look at the fib counts. It's more of an educational speculation because often or not, this price action does respect certain fibs and certain measurements because it's all math based. So what I want to do is give you my take on the macro view. We're not going to look at the hourly view today. I want to look at the daily view of where I think we may go. Now, as you can see here, this potential bull flag just broke out sideways. Nothing happened. We didn't go up. We didn't go back. So I'm just going to erase this. It's not really valid anymore. It's just a continuation of the chop. The chop is putting in an equilibrium pattern. It's getting tighter. Okay. Now here's the thing. These patterns usually end up with a breakout. And it doesn't tell you, an equilibrium pattern doesn't tell you the direction. It just says that there's a squeeze happening and it's going to break out soon. So with that information, how can you plan? Well, let me show you the different clues that I'm going to use, and I'll show you what they are. When I turn on my indicators and I look at the sideways price action, but then I look at this. Look at that. In case you're new and you don't understand what this is the MACD. This is showing me something very different than what the price action is showing me. And how could the MACD how could momentum be going up, but the price action is actually slanted down? And just yesterday we started to go sideways, but it's been going down. But this has been showing that momentum is picking up. This here shows absorption. So the way the momentum goes up and price action comes down, creating what you hopefully have heard or may hear in the future, a bull divergence. That means that the whales, the big boys, the people who control the market makers, they're absorbing what retail is selling. The fear, they're absorbing it. So as price action goes down, the momentum goes up, equilibrium is showing on the chart. This usually, and not always, tends to break to the upside. All right? Please listen to what I'm saying. Not always, but the odds are in the favor that it's going to break to the upside. That being said, let's long 100x. No, because you know why? I'm going to give you a case to the downside. And both of them are going to be based on facts, and they're going to be valid. But you're going to have to wait for validation. That's the key. But I believe it all starts with having a plan. If you have a plan to the upside, you know what your invalidation is if it drops. If you have a plan to the downside, you know what your invalidation is if it goes high, if it goes higher and hits certain levels. So let's go through that right now in a macro view. Right now, this tells me we have a higher probability of going up. So let's make a plan for that. Let me hide that just because it's just too much. We don't need all that. We've already taken this heat out, so I'm gonna remove this because we took that heat out already. We haven't broken the lower high rule, so that's still in play. Oh, That's still in place. I want to leave that there, okay, until we invalidate it. That stays there. All right, so now, if we go up higher, we have certain levels that I'm looking at that I haven't put on this chart. This one here. I haven't put on this chart because I was trying to keep this as simple as possible. I was trying to carve out this channel. It's not really a channel. It's been playing the top of this line very nicely, resistance support, but we're yet to fill this, yet to confirm this on here. I'm going to leave it here anyhow, because I think it's a very simple way of explaining it. If you're not very technically inclined, I think it's an easy way, easy visual for you guys to see what's happening. So I'm going to leave it. But on a different, on a different scale, I'm going to show you something that's very important. I'm really going to crowd this chart. So let me do this just to avoid the crowdiness. I'm going to remove this for now. I can put this later. I don't need that right now. This is very important. And let me do this here. So we have this to worry about. We've got this to worry about, right? Right there, and then right there. Okay, I'm going to take this liquidity grab, and I'm going to put this in red, so that there's too much yellow here. So I don't want to confuse, I don't want to make it confusing. Okay, so here's what I'm looking at. This is the diagonal channel, and I've talked about this in my previous videos, the diagonal and horizontal channel. All right, on a different view. This is like I mentioned before, this is a channel that I'm trying to establish that hasn't been established, hasn't been confirmed yet, better said. This has been confirmed for 5 months. This diagonal, 5 months, goes all the way back to March 13th is where this point started, that started to develop this channel. All right. That being said, we are right up against the underside of the, we're on resistance. Look left, support, support, resistance, support, 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 resistance, all the way back. And look at what we've been doing. Since we had the V-shaped bounce, which I'm going to talk about it in a little while because I don't believe in V-shaped bounces, but that's a discussion for a little later on. Since we V-shaped, this is where we stopped. And we cannot break that. So if today's speech does break us out of this area here and we do go higher, let me explain to you what I'm looking for. I want to see a break above here and a reclaim. However, if we do get because it's an announcement, sometimes we have FOMO. We have a crate like we had with CPI. With CPI was a pretty big candle, or PPI. Well, I think it was both of them actually. We had some nice little pushes up to the upside. A couple $1,000 candle, all right, no big deal. But if we were to get one of those candles because it's a news event, here is where I'm thinking we're going to have very, very strong resistance. When we break above here, if we don't back test immediately and we end up here, high probability we're going to come back in here and back test this. And this is going to determine our direction. It's a very easy way of looking at it. We know back test. I show you that on a daily basis. So I don't have to sell you on back testing. You know it's going to back test. 90% probability. And those are the probabilities for me. It's good enough for me. Those are probability, better said, that I like to use, so it's good enough for me. Now, and this is a scenario, again, I don't know if it's going to happen. This is just one scenario. If we break up here, we're going to find this very tough to break through. We're going to more likely smack down. And if we haven't back tested, we'll take an advantage. We'll take the time to back test this here. If this holds and doesn't break back down, then I'm going to look for the range highs. And the breakout, hopefully on the speech, if it is going to break out, and if it does go to the upside, that's what I'm looking for, to give me the next move to the upside. Now, if it doesn't, let me give you my case for the downside. We have what is considered a bearish market structure. You see this? Excuse me, guys. I had a sneeze. I caught it just in time. I paused the video just in time. We have a potential double top M pattern market structure. This right here. It's not confirmed until we break this neckline. And when we break the neckline, we're going to have a back test. How do I know this? Because I play these market structures every day on every time frame. The 1 minute, the 5 minute, and the 15 minute, because I'm a day trader, I see those very often. I see them on here. As a matter of fact, it's here. Let me show it to you here. I'm going to hide the indicators, and it's right here. You take the candle bodies right there. Okay, very similar to where. So basically, this represents this candle here. All right. So I can see a move up to here. Either we sweep these highs and we go higher and grab that liquidity and then come down, giving us the exact market structure, because that's a market structure that happens very often. It likes to sweep the left side of the M top. See right here? Look, if I draw a line right here, let me show you this. Let me, where's my toolbar? Let me show you this right here. You see that sweep? And then we come down. So we may have the exact same thing happen here. So let me grab this. Let me put this sweep here. So we may go up to here, grab that, and then come down. But my point of what I was trying to show you is, you see this neckline here? We dropped, and look what this candle did. Back tested the neckline, and we rejected. That is what I've been looking for here. Again, nothing is obvious. Nothing is concrete. We have to wait for those invalidations. So when I was talking about if we break to the upside, what's the invalidation? Okay, well, if we break to the upside and we back test this and we don't drop, that invalidates the double top to the downside. The flip side of that is if we break to the upside, grab this liquidity, or not grab it, but just come up in this area here, and we come back down, that invalidates the case to the upside. And now I have a plan of what I'm going to do for the downside. And when you look at these M tops, the majority of them, they end at 786, which means you take the swing high from that V shape, you take the swing low, you move this over, you move that over, and you put a reload zone right there. 786 is generally where these M tops end up stopping, or completing, better said, right here. Sometimes they'll go all the way back down to here, and they may even sweep the lows. Now, let me show you this. See how I showed you this here, this little sweep right there? Look. Here's another M pattern. Boom, dropped. Look. 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 This top here was $71,980. This one was $71,974. It didn't sweep it, but it came right up to it. So that's why I say that it could. I'm not saying that it's not going to, but it could. And I'm not trying to be a bear. I'm just trying to give you a realistic expectation. If it doesn't hit here, we can easily come right back and back test this here. It works both ways. Unfortunately, people can only see the bull case. So if you want to see the bull case, I'll show you the bull case right there. Look, here's the bull case. We dropped. We put a W, a double bottom. We came right to it. We back tested it. There we go. There we go. When you fail to see it on the bear case, flip the chart over, because maybe your bias is so high that all you can see is a bull case. Here it is. Here's your bull case right there. Make a bull case for this. Look, here's my bull. Here's my W. Look, right there. Sometimes that's easier for people. I don't know. But in any case, I need to see what kind of reaction we get in here. This reaction here is going to tell me a lot, because this line is a proven line that goes back 5 months. Look, this same line, just like this channel line, has a lot of history. Look, go back. Look at the cleanness of this line. So this has a lot of data, which is going to give me a much better result. than something that just started to develop. Case in point, this channel has no data, has very limited data because I made this channel based on this support lost and the bottom here. And look, we've only come down to here. No, we haven't even come down to here. We went up to it, but we back tested that, but we have no data carved out to begin to say this is a channel. This is one that I was trying to develop, where this one is already developed and it's already been around for 5 months and it has strong data points. So if we break up to here, what happens, the direction in here is going to validate my thesis to the upside, meaning grab here or here, come back down here, hold, don't break below, we're going higher to the range high. Range high, it's an automatic short for me. Many people can't accept that. Oh, how can you make it automatic, BC? You know where it's going to go. I know with a high probability what it's going to do here. That's what I know. Not exactly, with a high probability. How can that be? Well, 5 months we've been rejecting here. So you think these shorts would have worked out? Or these hopium boys thinking it's going to go to $80,000 that was going to work out? How did it work out for them, the $80,000 targets? It didn't work out too well. So for 5 months, I got proven data what's going to happen here. Automatic short. There's not even a question. Now, okay, BC, what if you're wrong? All right, what if I'm wrong? What do you think is going to happen if we break above here after rejecting for 5 months? Do you think it's going to go 80,000? I can tell you with a 95% certainty that however big this candle is going to be, we're going to backtest. We're going to backtest that. On that backtest, if it holds, I get out of my short and I reopen a long. That's simple. It's not complicated. You have little to no loss risk here on an area that's proven. Same thing with this line here. This line to me is an automatic short. 5 months of data showing support and resistance. Same behavior that's going to happen here is going to happen here. Same behavior. So my target to sell is here. Automatic short. If it flips above it, I know it's going to backtest. I get out. I get back into my long. Same exact here. My target for my long is here, depending on where we're at when we start climbing up here. That's my exit, my TP for my long, and my exit for my entry for my short. And I play the exact same game. Validation, invalidation. It makes life much more simpler. Now, I guess I already talked to I was going to say I'm going to give the case of the downside. I guess a case of the downside would be if we do go a little bit higher, like I mentioned before. I think I've made that case. I'm sorry. I just don't know if I remember or not. It would be coming down into here. That's it. And for that to happen, if we do break above here, and we have to fall below here, there's obviously below this line. And if we confirm it, we back test it, and it holds, doesn't break up, then we're going to go down. And I've got $9 billion worth of reasons, $9.6 billion of reasons why the market makers will want to go down to liquidate these. And I have data from DCT heat maps that show me a big liquidity cluster to be completed at $50,000. So again, my decision and my view isn't based on hopium. It isn't based on what Twitter wants. It's based on facts. And it doesn't mean it has to play out that way. And that's why I have a plan for the upside and I have a plan for the downside. And that's why if you read the comments of when I post a move to the upside or a move to the downside, you can weed out the ignorant people. Oh, great, BC, we're going to go up or we're going to go down. That shows the level of ignorance that people have, because they think that they're going to come on Twitter and they're going to find someone who can predict exactly where the price is going to go, rather than saying, okay, well, I'm going to be prepared because if we go up here, I know what the signals are. I know what the plan is. I know what the validation, I know what the invalidation is going to be to the opposite theory. They don't think that way. Oh, great, BC. We're going to go up or we're going to go down. Those are peasants, ignorant people who just don't want to learn. They just want to criticize people who are trying to help them have a different outlook on the market and how to view the market properly. Because any respectable trader will always give you two different scenarios for that reason. None of us know what's going to go. but we have with a pretty high conviction on what we need to look for a validation. Now, sometimes those validations get blown out the water with FOMO candles or with sell the news events that don't respect the TA the way they normally would. But eventually, it'll settle down, and if you let all that volatility subside, usually starts finding its ground on what it's carved out. Is this the new range? So forth and so on. So for right now, nothing. Right now, look, we're just pushing up to that middle line right now. As a matter of fact, if we go to the hourly, we probably have a nice candle. Not that nice. Look, we're pushing up here. Look, but we pushed up here before. Look, we've pushed up to here before. Look, we've pushed a little higher. Look, and we just come back again. That's why it's such a well-rounded data point, because it has a lot of history behind it. The price action acts a certain way when it hits this level. And there's not too many levels that it does that. We have 1, we have 2, we have 3, and we have 4, the bottom of the diagonal channel. Why? Because if you look left, there's a certain behavior that happens. We lost it, and you can see it better on the smaller time frames. So let me show you the behavior on the small. I'm going to remove this just for right now. This other channel, because I just want to show you. When we lose it, it's okay. It'll back test. How do you know that, BC? There it is. Did it cross it? Nope. It rejected it. It rejected. Then here it crossed. We're able to close above it, and we back test that. We lost it again. We came above it, and we back tested. We lost it here, and we back tested. Look, absolutely perfect. I'm not making this shit up. Here, let's look at it again. We lost it. What did we do? Back test. Look at this. Resistance. Finally, we broke above. Oh, shit. Hold on. Finally, we broke above it. Okay. Are we going to go to all-time high? No. Relax. We're going to back test it. There it is. There it is. Oh, we lost it again. It's okay. We'll back test it. This one didn't back test. Came back up. Came back down. There's our back test. Candle body. Right to it. Then we opened this new candle. Went up again. And look where it lands. Okay. That's a coincidence, BC. All right. Keep on looking and tell me that every single time it hits, it does the exact same thing, but that's a coincidence? You tell me you can't predict with the good, I guess predict is not really a good word, but you can't map out a probability based on this? Then you need more time to develop your skill set. If you can't look at this and see how obvious this is, I don't know what to tell you. All right. So I just wanted to just come on here and just kind of tell you that we need a little bit of time. We need to see which direction we're going to go. We want to make sure that also we have to always remember that the market makers are always trying to position themselves in a very with an advantage. So don't believe every move you see until you see a confirmation of a back test, because what they can easily be doing is they can easily be trapping you to go long just to do what? Just to take it away, like we see very, very often. So let me show you. Let me show you what a trap looks like. Here's a perfect example of a trap. Okay, and a shakeout. Here's a shakeout. We have a flag pattern on the daily. We push up. What do you think is happening when we pushed up? You have all of these bubbles, all of these contracts going long. What do? They flush you out. Because look, if you took a position off of this breakout flag, your stop is where? Your stop is on the lows, right? Look. Your stop would be naturally right here. This is where your stop would be, right there. So what did? They went up higher, flushed everyone out who entered here. Anyone who had stops, they took them out. Even if you had a little buffer, they took you out. And then what do? Right back up. Right back up. Now, we went back down to the bottom of this range. Okay? We're going up here. Look at this. We're consolidating. Oh, look, this looks like we're going to go up. Look, we're pushing down. We push up, make people think it's going to be another breakout, and they come back down. They trap everybody here. This is a bull flag, guys. Came right back down. We're going to go back up again. Look, they sweep these highs, and they bring it back down. You just have to know what to look for, guys. I can't possibly know what the direction it's going to go, and I don't need to know. I just need to know what the points of validations that's going to tell me that we're flipping a resistance into support or vice versa. So for right now, because we have a market-driven news event that could turn into something. It could turn into a nothing burger, but it can turn into something. And as you can see, we're already pushing up. It has an effect on the market. So now let's see which one of these key levels it hits. Let's see if it sweeps these highs, hits this liquidity, and comes back down into this area here. Or if it just hits the double top, like it did back here. Look, like it did right back here, and then comes down. Market structure is the same. Market structure is the same. Look, market structure is the same. If you have a hard time seeing it, here, I'll show it to you. There it is. There it is. Tops, the market's smiling at you. Here's the top, here's a smile. Here's the top, here's a smile. Before we drop, you see these very common peaks on every drop. Look, it's right here. Double tops. Look at this. Double tops. Look, double tops, drop. It's something that's very common. It's not very difficult to carve out. If you're used to seeing it, if you know what to look for, it becomes easier. And I don't expect people to know automatically. You have to give yourself the time. Oh shit, 26 minutes. All right, guys, I'm gonna let you guys go. I'm sorry. This is supposed to be a really quick brief. It got away from me. If you want to join my Telegram group, guys, if you don't want to learn all this, you just want me to tell you where to buy and where to sell, $25 a month, 88 cents a fucking day, 88 cents a day. So if you want to learn, let me know. If you don't want to learn, you just want to know where to buy and sell not only Bitcoin, but altcoins as well, let me know. And I'll send you the link to the website where you can join. As a matter of fact, you can just go here. Look, I'll type it out here for you. I'll type it right here for you. bctgsignal.com. You just go right there. Let me make this a little bit bigger for people like me that are blind. Go to that website or send me a DM. I'll send you the link, and you could. I'd rather me send you a link. You know why, guys? Scammers. The way scammers work is they will look to see which letter you may spell incorrectly, and they'll actually create a website to that, and then it'll be a fake website. And it'll be just one letter transposed. They do all kinds of crazy stuff. So I'd rather send you the link directly so you know exactly what to click. All right. So that's just a way to be safe when you're dealing with with your money, when you're dealing with the internet, and when you're dealing with websites on how to stay safe. All right, guys. Everyone have a really good day. I apologize that I went over my 15 minutes. Hopefully, it was it was informable. No, informable is not a word. Hopefully, it informed you to what to look for. And we'll have to wait to see what the market tells us, what the market shows us, better said, and what direction we're going to be heading. And then from there, hopefully, my hope is that we break out of this zone, that we come out here, or we come back in here and double test this, complete the M top, and then start hitting back up. I'm a bull, all right, but I'm also an analyst. So you can't be a bull or a bear when you're an analyst. It has no place. You can be a bear or a bull when you're a trader, but not an analyst. You cannot afford to be a bear or a bull when you're an analyst. All right. So just keep that in mind. Talk to you later.